Welcome students to another lecture in this series. Let us begin with the formats of cash flow statement in this lecture. Okay, we will be learning how to prepare cash flow statement in this lecture. Preparation of cash flow statement is much similar to that of funds flow statement only. In fact, the basic difference arises from the definition of funds only. In funds flow statement, funds actually refers to net working capital. We studied in the previous lecture also. While in cash flow statement, it means cash, and we have defined cash fund as per accounting standard 3. And it has not actually prescribed any specific format for cash flow, but SEBI has approved a format. Let us see. This is quite important because you will be performing all your you will be constructing all your cash flow statements in this particular format. If you see it with the caution, you can see that the whole cash flow statement is divided into three categories. First is this cash flow from operating activities, where at the first step you will be uh, starting with net profit and you will perform the adjustments of the non-cash items, and then you will further make adjustments for changes in current assets and liabilities, the cash generated from or used in the operations, and finally you will treat with income tax, and you will treat extraordinary items, and finally you will obtain the cash flow inflow or outflow in operating activities. The second part here is the cash flow from investing activities. We know this very well, that we treat the purchase of fixed assets or the proceeds from sale of fixed assets, interest and dividends received, net cash or from or used, that is like cash flow, basically net flow from investing activities is treated at this particular point. So first part is operating activities, next is investing activities, third is financing activities. Now let us see what we do in cash flow from financing activities. Proceeds from issue of shares and debentures, then proceeds from long-term borrowings or repayment of long-term borrowings, interest paid, dividends paid. Finally, we obtain the flow from inflow or outflow, whatever it is, from financing activities. Net increase or decrease in cash equivalents is obtained at this point by treating the three flows from operating, investing, and financing activities, and finally, you can add the cash or cash equivalents balance in the beginning of the period and finally match up with your closing balance. Then let us begin with the calculation of cash flow from operating activities. We will be learning one by one all the three categories individually. So for operating activities, we do have two methods, out of which direct method is not much used these days. Indirect method is widely used these days. Let us see direct method first of all. Under this method, the cash receipts from operating activities and the cash payments from operating activities are calculated, and then it is showed in the cash flow statement. The difference between the total cash receipts and total cash payments are shown as the net cash flow from operating activities. Here I have quoted certain examples, like we can have cash sales of goods and services, cash received from debtors, then we can have other, on the other hand, we can have payments like cash payment for the purchase of inventories, cash payment to creditors for wages, salaries, and other operating expenses, cash payment of income tax. So these are certain examples of your cash receipts and payments, which using which we calculate the flow from operating activities. So there are many items in this which appear in P&L account on accrual basis. So necessary adjustments are made to these items to convert them into cash-based items. Generally, here we will be practicing more of indirect method. Under this indirect method, the net cash from operating activities is determined by making necessary adjustments in the net profit or loss as disclosed by P&L account. Adjustments in net profit or loss are for the effects of basic three items, that is your non-cash items like depreciation, changes during the period in inventories and operating receivables and payables. All other items for which cash effects are investing or financing cash flows. This indirect method is also known as reconciliation method, as it involves the reconciliation of the net profit which were net cash flows from operating activities. The method of calculating cash from operating activities, let us see it in detail now. As I told you, we start with net profit for the year and then we deal with the non-cash items. Let us see, we add non-cash and non-operating expenses like depreciation, goodwill written off, preliminary expenses written off, share discount written off, loss on sale of fixed assets, investments, provision for taxation, and we subtract non-cash, non-operating incomes like profit on sale of fixed assets and investments. Then further we have net profit after adjustment for non-cash items like adjustments for changes in current operating assets except cash and cash equivalents and current operating liabilities except bank overdraft because they are liquid in nature. What we do, we add the inflows, means activities which are providing cash. We add the inflows like increase in current liabilities and decrease in current assets. On the other hand, we subtract the outflows like increase in current assets and decrease in current liabilities. And finally, we subtract the income tax paid from it and we can obtain the cash from operating activities. Let us have a question on this. We can see that we are given with operating activities uh, as on 31st March 2009 and 2010. Let us see how to calculate cash from operating activities from this. We will start with the same performer. We will see the net profit during the year, which is 5,000 at this point. Then we do have a transfer to general reserve. We have marked it here. We do have goodwill written off. We have added these because these are non-cash items, non-cash expenses basically, which are written off here. So we will add this to it. And then we have further, there are no non-cash incomes to get subtracted. Then we add the changes in the working capital, means changes in the current assets and current liabilities. We will be adding the inflows and subtracting the outflows. So we, in this question, we are able to see decrease in debtors as an inflow. So we have added it. And on the other hand, we have three outflows, that is increase in bills receivable, increase in salaries, prepaid salaries, increase in outstanding wages. So finally it is subtracted and cash from operating activities is being obtained. Then another question we have, almost similar question. Let us have how to sort it out. Here in this, we do not have any non-cash items. So basically, profit made during the year is considered, and we have added the decrease in current assets and increase in current liabilities. All the amounts are being checked and posted here. Finally, we are able to add 8,300 to the profit of 70,000. And on the other hand, we will be subtracting outflows, that is increase in current assets and decrease in current liabilities. Finally, we are subtracting 5,200 from it to obtain the cash from operating activities. Now let us move towards the next section, that is your calculation of cash flows from investing activities and financing activities one by one. First of all, if I talk about investing activities, we have already seen that it is a result of acquisition and disposal of your long-term assets, non-operating current assets and investments. The net effect of cash inflows and outflows is determined and shown as cash outflows from investing activities in the cash flow statement. Whereas if I talk about the cash flows from financing activities, these activities relate to issue of your shares and debentures, redemption of preference shares and debentures, raising of loans and repayment of loans, etc. The net effect of inflows and outflows of cash relating to these financing activities can be calculated and shown in the cash flow statement under the head cash flow from financing activities. Let us have a look at a numerical based on this. You can see on liability side we do have a share capital which is increasing, debentures decreasing, general reserve again increasing, creditors, bills payable, outstanding expenses, three current liabilities. Then here we have goodwill which is being written off, land building, land and building increased, this means there has been a purchase of land and building, machinery also increased, again purchase of machinery. We have two current assets here to be dealt in the working capital, that is debtors and stock, and cash balances are also given to us. Let us have a look how to draw the cash flow statement. You can see the performer. We are putting the heading cash flow statement for the year ending 2010. At the first point, we have considered the cash from operating activities. We have begun with the profit which during the year has been made and transferred to general reserve. Then we have added the non-cash item, that is goodwill written off. Then we are adding up the increase in current liabilities and decrease in current liabilities, increase in current liabilities and decrease in current assets. Current assets are not getting decreased, so for that reason it is not visible here. On the other hand, we are subtracting increase in current assets and decrease in current liabilities. Finally, we are able to obtain the cash inflow of operating activities as 83,000. A positive amount is there. Then cash from investing activities, we have purchased land and building and machinery. We have just seen that from the question. So the amount is as marked as outflow here. Why? Because the amount is in minus. So it's minus 1,10,000. Then we have cash flow from financing activities, that is issue of shares are there and redemption of debentures because it was decreasing. Finally, we do have an inflow of 30,000 finally, and we can see a net increase in cash after sorting out these three numbers. We can add the cash balance in the beginning of the year and finally obtain the cash balance at the end of the year as 18,000 here. I hope it was very enjoying for you to check out the numerical based on cash flow. We do have this last topic here from theory to build your base, that is objectives and uses of cash flow statement. Let us work it out. First is useful in cash planning. You know, our cash flow statement proves very useful in to management by providing a base to evaluate the ability of a company to generate cash. So basically you can prepare an estimated cash flow statement for the next accounting period, so that you will get to know that that management will get to know how much cash can be generated internally and how much do they need to arrange from outside. Okay. Then we have assessment of cash flow from operating activities. It provides information about cash generated from operating activities. It provides explanation for the difference between net profit and cash from operations. The cash provided by operating activities is also important to assess the cash generated by internal sources. Then the third point we have is payment of dividends. Decisions to pay dividends cannot be based on net profit only. Availability of profit in the form of cash is also very important for dividend disbursement. Thus, cash provided by operating activities assumes importance for declaration of dividend. Next important objective or utility of cash flow statement is cash from investing and financing activities. These 2 points can be written separately as well. Cash flow statement provides information not only about cash but also by operating activities but also for non-operating activities under these two heads, that is your investing activities and financing activities. This helps in explanation of overall liquidity position of the enterprise and its ability to meet its cash commitments. The last utility here explains the reason for surplus and shortage of cash, because you know these 2 points are very important for any organization. So a business may have made profit or yet running short of cash. Similarly, a business may have suffered a loss but still have may have sufficient cash at bank. So cash flow statement discloses the reason for such increase or decrease in cash balances. So this is the base of your cash flow statement that we are already done. So in next lecture we will be practicing on numericals based on cash flow statements, and thereby we will be finishing our unit 2 by practicing cash flow statements. If you have any doubts, you may write to me, you may post your mails to me. Till then, take care, study well. Thank you.